At 9:47 in the morning on March 18, 2020, Carmen Reyes clicked Confirm Sale at her home desk in San Antonio. The account cleared to $103,000 in 11 seconds. She was 5 trading days from the bottom of the market. The confirmation email arrived at 9:47:32 a.m. Subject line, Sale confirmed, $103,000 settled to money market. She read it twice, then closed the laptop. 8 years, $300 a month. She had opened the account in 2012 with $2,000, sitting at the same kitchen table, reading a library book she couldn't remember the name of. By July, the gap between what she had and what she would have had reached $41,000. By year-end, it was $50,000. She never wrote either number down. San Antonio sits flat under a pale sky most of the year. Northeast side, wide streets. Live oaks, one-story houses, the kind of neighborhood that looks the same in every season. She had opened the account alone. Marcos knew it existed. She had mentioned it once, years before it grew into anything. He had never asked for the number. She had never offered it. Every morning before work, she checked the balance. Not anxiously, routinely, the way you check the weather before leaving. By January 2020, the account showed $157, $412. February 19th was the first drop. She watched the account fall from $157,000 to $148,000 in 4 days. She held. She had held through drops before. Carmen worked patient services at a hospital. In late February, the hallways changed. Laminated printouts appeared on the walls, mask protocol, visitor restrictions, language she had not seen in 22 years of working there. The cafeteria got quieter. Supply closets were being inventoried twice a week. She walked past the ICU on her lunch break and noticed the doors were propped open. They had never been propped open before. At home, she watched cable news until midnight. The numbers moved differently than 2008. Faster, with more volume. She had been through 2008. She remembered her mother crying over a 401k statement. On March 9th, the S&P fell 7.6% in a single session. Trading halted. She was at her desk at the hospital when the alert hit her phone. She turned the screen face down. She drove home that evening on I-35 in the dark. The road was quieter than usual. A gas station sign read $1.89 per gallon. She noticed it, then forgot she noticed. The account was at $119,000. She had not checked it in 3 days. The number surprised her less than she expected. She sat with it for a few minutes and then made dinner. March 16th, Black Monday 2. The S&P fell 12%. By close, her account stood at $103,000, down 40% from January. 8 years of slow accumulation on one line. If you want to see how 8 years of careful saving can hinge on 18 seconds, subscribe. Drop a like if this one hit close. Tell us in the comments, in March 2020, would you have sold? Back to Carmen. The account had never appeared on a joint statement. She filed taxes separately for investment income. Marcos knew the rough shape of things, not the number, not the direction. This is the part where most people say they would have held. Most people weren't walking through a hospital that was running out of gloves. On the night of March 17th, she opened a Goldman Sachs research note she found through a link on Twitter. It projected a 24% drop in GDP. She read it 3 times. She pulled up the account interface at 11:42 p.m. The cell form was already open on the screen. She had never closed it. She typed in the number. She did not submit. She went to bed with the laptop open. The screen went dark sometime after 2 a.m. She woke at 5:15 and checked the Asian markets before her alarm went off. She arrived early to work on March 18th. The hospital had begun staging gowns in the corridor outside the supply room. A colleague asked if she had enough food at home. She said yes. At 9:33, the S&P opened lower. She checked her phone from the break room. The account was down another 2% from the close. She walked back to her desk. At 9:47, she opened the account on her work computer, pulled up the cell interface, and clicked Confirm Sale. 11 seconds. She closed the tab. $103,000 moved to a money market account. She described it to herself not as selling, as repositioning, not a retreat, an adjustment. Her brother David texted that afternoon. He had sold everything 2 days earlier. "You gotta preserve what you have," he wrote. She read it and did not respond. The rest of March 18th passed without event. She drove home on the same road she always drove. The account balance didn't change because there was nothing left to change. The number sat still. She had been investing since 2012. She had never had an advisor, never read a prospectus. What she knew, she had taught herself from library books and a single low-cost brokerage account. She had spent 8 years making careful decisions in careful increments. The click that ended it took 18 seconds. The market does not grade on effort. Between March 23rd and June 8th, 2020, the S&P 500 gained 44%. It was the fastest recovery from a bear market low in the history of the index. March 23rd passed like any other day. She worked a 10-hour shift. She didn't check the market. The index touched its low that morning and turned. She began watching again on March 24th. The S&P rose 11% in a single session. She noted it without feeling. She had seen dead cat bounces before. This looked like one. She started a folder on her desktop. News articles, projections, analysis. Goldman, J.P. Morgan, Bloomberg. The articles showed different numbers. Some said the worst was still ahead. She kept saving them. April passed inside the house. She worked from home 2 days a week. She and Marcos cooked dinner every night at 6:30. They watched the news. Neither of them talked about money. The neighborhood was quiet. The elementary school had a paper sign on the chain-link fence, closed until further notice. She drove past it on her way to morning shifts. On April 9th, the S&P posted its best single week since 1974. She read the headline at 8 p.m. on her phone. She put the phone down and watched the rest of the news. This is where it stops being just about money. She was going to work in a hospital where people were dying. The fear she used to sell was not irrational. It was real. By May, the S&P had recovered to its February levels. She tracked it on a notepad she kept in the desk drawer. Not a spreadsheet, just a column of numbers in pencil. The market did stabilize. She had defined the condition and the market met it. Then she moved the condition forward. The new stabilization was always 2 more weeks ahead. By July, she ran the numbers. If she had held from March 18th through July, the account would have been $144,000. It was $103,000. The gap was $41,000. She re-entered the market in October 2020. The S&P was at 3,400. She had sold when it was at 2,304. She was buying back in at a 47% premium. She told Marcos that she had made some adjustments during COVID. He nodded. He did not ask for the specifics. She did not offer them. Her brother David still believes she got out at the right time. She has never corrected him. They talk on Sundays. He is still waiting to re-enter. By December 2020, the account held $110,000. If she had never sold, it would have been approximately $160,000. The difference was $50,000. She never wrote it down. She still checks the account every morning before work. The habit did not leave with the decision. It is the first screen she opens. As of 2023, the account has recovered through continued contributions and compounding. It shows a number she is satisfied with. She does not discuss the gap. She was asked once at a family dinner about regrets. She paused. Then she said, "The information I had at the time was incomplete." That was all she said. This wasn't the only time this happened. In March 2020, retail investors pulled over $100 billion from equity markets in a 4-week period. $50,000, 8 years, 18 seconds. It made sense. At the time,